definitely want to thank all of our distinguished panelists for joining us today. I know that in our current environment, underwriting, getting cases approved and through with our carrier partners has taken on a new level difficulty and challenge. So I think there's going to be a lot of interest in the things that we talk about today. So I want to thank Kelly Stone, Mark Crowe, and Richard Fetter for joining us today. We've got some great questions to kind of kick off, and hopefully we'll have a little ad lib in there too. So I'll go ahead and facilitate the questions, and we'll go in an order of Kelly, Mark, and Richard with our answers, and really looking forward to hearing what you guys have to say. So we'll go ahead and kick it off with our first question. For Kelly, again, Mark and Richard, what challenges have you faced with underwriting now during the COVID situation?
Wow, so that's kind of a loaded question, because I think it's more so what challenges have we not faced? Because gosh, from day one, it seems you can do everything you can to be prepared. And I think as an underwriting, just within the underwriting industry, I think, and I can maybe speak for all three of us and for most carriers, but I think we all felt prepared from a work from home standpoint. Here at Protective, I mean, we were 95% remote to begin with. 88% of our managers were already remote. So going to a 100% remote was an easy challenge for us. And even as an organization, a lot of our support staff was not, but by mid-March, we were 100% remote there as well. And really ticking away and plugging away from a productivity standpoint, we didn't skip a beat. I think, though, getting into, maybe third week in March, last week in March, we all started to see some things with our vendors, in particular, the examining companies, APS retrieval companies, more so with the examiners, at least at first, that we were having challenges, obviously, in certain areas where examiners couldn't schedule exams. And then, of course, we have clients that are reluctant to take an exam in this environment, allow an examiner in their house, and so forth. Pretty quickly, we understood that to be, challenge number two. So challenge number one was making sure we were all able to get policies underwritten and issued in a 100% remote environment. I think we did that one very, very well. Then number two was, what do we do now that we can't get exams done? Perhaps some challenges with obtaining medical records, as doctors' offices, aren't staffing the same way, and so forth. And we had to come together with, okay, so what does that mean? We have an accelerated program that we continue to do, but obviously if a case fell outside of that, we have an opportunity to say, okay, what can we do otherwise? Being in a pandemic, at least for us as a company, it didn't seem like a good time to necessarily relax wholeheartedly our accelerated program per se. So we kept that strong. And actually within the last month or so have added our permanent products to that, because we saw that as a need, and that was well vetted from a mortality standpoint. We're really confident with that. But what do we do on those fully underwritten cases where we're not able to get an exam? And that's where we've had to be a bit creative and while we didn't necessarily come out with a program to say, okay, we're going to take everybody under this age without an exam, we didn't believe that would be a good mortality decision. We did give our underwriters the ability to look at cases on a case-by-case basis. If there was a recent physical at a physician's office where there were labs done, that sort of thing. Maybe there was an insurance exam a couple years ago and a recent visit. Those are all creative things that we can do to fill that need. Certainly we're keeping cases open longer in instances where maybe exams can be done a bit later. So all things we're doing. A couple other things that hit us are EHRs, digital, some kind of digital solutions that we were exploring for a pilot. And generally when we do a pilot here at Protective, we'll do a pilot on the back end. So we'll go out and we'll order, human API or Collateral or MIB electronic health records. We'll get them in on the back end, traditionally underwrite them, and then take a look at it on a back study. We actually pushed ahead and we're doing a live pilot with those three vendors. So Obviously, the opportunity is if we can get that data and if it enables us to move forward, we don't want to just do that on the back end. We want to get those cases out the door. So we started that a few weeks ago. Also starting a pilot with Lab Picture, though that's been kind of hastened in this whole process. So it's really forced us, I think in a good way though, to explore the other options out there and see what we can get out of those. So one of those where you're not necessarily, you may be giving up some traditional requirements, but trying to replace them with something new, a bit untested, but hopefully we'll find as an industry the ability to move forward with some of these and in the end have a quicker underwriting process. And then I haven't even touched on, and I know this may go into the next question, what we've all done as carriers in response to the mortality at the older ages and so forth, because I think that all kind of hit us in the beginning too, is where's this pandemic going? And man, it was like, we're just keeping our finger on that in the first few weeks. And, so it's been crazy. I think every single day has been a different crazy challenge. I usually travel a lot, and clearly I haven't left here. I haven't left Nashville, since second week in March. But I think I'm busier here sitting in my basement than I've ever been. So it's just crazy times.
Yeah, definitely. I mean, everyone's working in a new environment and dealing with the challenges that are being presented. So great stuff there, Kelly. Mark, how about you? What challenges have you faced with underwriting now during the COVID situation?
Yeah, so listening to Kelly's response, we had some very similar challenges ourselves. So obviously initially, once this all started to unfold, it was business continuity, make sure we can get everybody out working from home. Similar, Pacific Life, most of our underwriters were already working from home. So it was more of just a transition, getting the new business folks, and luckily that worked out well. Then obviously the second challenge is when it really hit and certain states were shut down, as Kelly mentioned, for getting exams done, or proposed insureds weren't comfortable having someone come into their home to do the exam or for them to go to an exam facility. So we had to look at that and come up with some criteria of what we could do in those situations. We were already piloting and looking at various I'll call it electronic health data sources, so that drastically sped up our pilots with those, and we started to take a look at those and see in certain circumstances could we use those in lieu of an exam in labs if we could collect enough data from those additional sources. So it's been a good learning process, from that perspective. Other challenges, just your normal guidelines that you have to throw COVID on top of. Somebody that you would normally take at a table 5, with COVID-19, you may not want to take that risk now, not knowing, fully what the mortality impact is of COVID-19. You have challenges. You get the medical records, and the insured was supposed to have a test or something else done, and they haven't done it yet because of COVID. So what do you do in those situations? You go without that test, or do you have to postpone until they have it done? And of course, really depends on what it is. I had one example where a guy was having abdominal pain and they wanted to do exploratory surgery, but they had to hold off until COVID was over. So clearly not a risk, and something that we've had to deal with in the past. Reinsurance, our great partners, in working with them, we did have a reduction at one point in our retention and auto buying, just given the risk of COVID-19. And that's something we've continually been looking at and making adjustments to over the last couple of months.
Yeah, and this is something that is an evolving situation, if not on a daily basis, certainly a weekly and monthly basis. And I think all of your distribution partners can appreciate that you guys are doing your best to kind of adapt to the situation as you get new information, as new things arise, be it treatments, be it information, governmental or otherwise. So the challenges are real. Rest assured, your partners in the field understand that, even if everything you hear from us is do more, approve more, and take more risk. We do understand that you guys are faced with some challenges as well. So I know Richard's going to join us shortly, but we'll flip to question 2. What changes have you guys made at a carrier level for underwriting due to COVID, and do you anticipate more changes on the horizon? Kelly?
Yeah, so, and I think I alluded to this, and Mark, I know you've alluded as well. We've had to take a look at, what does COVID mean at certain ages, rate classes, that sort of thing. We were, again, it got back to, gosh, we're going to keep our pulse on this, see where things go. But it got to the point where there seemed to be, there was quite a bit of public health data to indicate that individuals at the older ages, in particular 80 plus, even 70 plus, 60 plus, certain situations tend to have a less favorable prognosis when they become infected with COVID. So we here at Protective, have taken the stance where we at this point are not looking at individuals, not accepting applications over the age of 80. So 80 plus, it's like a 1 in 5. It's like a 20% mortality. I mean, this is early on of what the mortality is there when they contract COVID. So that one was somewhat clear. And I know a lot of carriers out there were doing something very similar with that. I think then where carriers began to differ was under the age of 80, what do you do? We believed that there were still some good risks in that 70 to 79 group. But there was a lot of clear data that individuals with comorbidities had a higher risk. So we said standard or better and cannot have, heart disease, diabetes, and the comorbidities that have shown 60 plus, similar, acceptable, except up to a table 4 as long as they don't have those. That age under 60 tends to be the best age group. That said, you get into high substandard, and I think it's one of those where it used to be with underwriting, we didn't know exactly what the mortality would look like at the really old ages. And so we always hedged our bets with, well, gee, we won't go high substandard over the age of 80. And now we won't go high substandard over the, really at any age. We'll do up to a table 4, 0 to 59. And for any condition over that, we might consider. So we still may go high substandard, but we don't want to see anybody with the comorbidities. A couple of other things that we've added is just a good health statement on delivery on all cases, except accelerated cases, of course. So any case that's going to sit in underwriting, we just want to be sure, they haven't developed anything during the underwriting process. And then we've taken a look at our cash with app. We actually have a conditional receipt in most states, which is fairly protective, and we've not made a change there, but we have made a change on our 2 states that have a temporary insurance agreement and have asked for no cash with app in those 2 states. So that's affected us less. Those limitations, though, we're looking at, we set on a daily basis, which I guess I can't say with 100% certainty it was a daily basis, but we kept our pulse on it. We actually, in this past month, though, have done kind of a big study on it. We're kind of dissecting what's going on from a public health data standpoint and so forth, kind of looking at what all the other carriers are doing and so forth. And we are looking to make some changes if changes are warranted, maybe up, maybe down. We'd like to simplify a bit. So it's a bit easier for our underwriters and our field partners to understand our guidelines. Our intent with the no comorbidity standpoint was to allow more cases in. But I think what it's done is muddied the waters a little bit for our underwriters and the field on that. So looking to perhaps simplify that, and add in areas that really maybe we didn't cover to begin with, like high substandard for build and things like that. I think there's some data out there that shows that there is some considerable risk with that, but perhaps not necessarily with somebody's overall standard.
Yeah, Mark, same question.
Sure. Yeah. So, when this whole pandemic first started to unfold, we were, as Kelly mentioned in the first question, we were meeting almost daily, just trying to work through all the different scenarios that we missed the day before. But and we made adjustments. So we're looking at our guidelines every month and talking to our reinsurers and making adjustments. So currently what we're doing is anybody that's greater than a table 4, we're not participating at this point. For ages 71 to 80, standard or better is what we would participate in, and nothing over 80. We've also increased the use of good health statements on our end. Anybody that's rated, some of the older ages, we will include a good health statement at delivery as well. For folks with COVID, we've actually had some applications come through with insurers that have had it and have recovered. We want them to wait at least a month from when they were, recovered from it before we would consider. And We want to get some kind of clearance from their doctor that they have no residuals. As I mentioned during the first question, we've had some changes to our auto bind limits that have been coming up over the last couple of months, which is good. And as we mentioned before, we started looking at some of those alternate data sources to see what we could use in lieu of traditional requirements when we just couldn't get them.
Got it. So, we've talked quite a bit about challenges and the way things have had to change and adapt. And I think that kind of leads into our next question about technology and, what technological challenges are you guys facing in this? I mean, underwriting has been a semi-remote situation for quite a while, but now with the, ever-changing guidelines, the ever-changing things that are happening, in the world around us, what, I guess, technological challenges have you guys experienced in being able to underwrite cases, either by, speed or accuracy? So kind of touch a little bit on the technology challenges that you guys have felt, Kelly.
Yeah, so I think from a new business perspective and a telelife perspective and kind of a digital end-to-end, our process, we found that our process is pretty good. So that's a win on that side of it. I think from a pure underwriting standpoint, you mentioned the changing guidelines and this and that. It's and while we've been 95% remote, one would think we'd have, technology just down from a communication standpoint. I think our technology to hook into our systems and to underwrite and to be productive is there. This is the third company I've worked for that I've experimented with systems and underwriters working remote, and I will say this is the best system I've ever worked with. I mean, we go in virtually through a virtual machine, so it's just awesome. We don't have to worry about somebody's laptop not having the proper updates and that sort of thing. So we really have very little downtime with our underwriters, and things really flow pretty well. The one issue we've seen, though, and this goes back to communication and the need to really just be connected right now in, rolling out guidelines and talking through, how do we handle this? And gosh, I have a case where somebody had COVID, what do we do? And it's been communication, and we can communicate, but what we lack, because our systems, we're on a virtual machine and so forth, is the ability to do what we're doing here and to get online and actually see each other and to be able to talk through these things. We can do it via teleconference. We can do it via instant message. And we've always had those things, and those things were very sufficient in an environment where we weren't changing daily. But I think, and maybe this gets back to the need that we all have as human beings of having that need to, have kind of personal interaction as well. And so even if our underwriters were remote before, there were a certain subset, 5% that were in the office, some of our managers were in the office. And now, we don't even leave after work to go to the grocery store much because there's not a whole lot to do. So maybe it's just a human nature need, but we don't have the ability to video or audio each other. So that's our number one is kind of just a staffing challenge. Our virtual machines do not accommodate for that. So we've had to obviously go back to our old methods of, we've had just kind of, we call them our Friday afternoon chats. We, at 3:00 on a Friday, we'll get, Brad Gable and I will get on with our underwriting team and we'll talk through cases and COVID for the week. And we did that early on a couple of times, but it would have been really nice to be able to do it in this way. But our underwriters don't have the ability to do that.
Yeah. Mark, talk a little bit about some of the technology challenges that you guys have experienced.
Yeah, so from a technology perspective, similar to what Kelly was mentioning, we've been virtually remote anyways. So adding the additional underwriters that would be in the office, adding new business, and adding other people in the company, to the VPN, luckily hasn't caused many, if any, issues for us from like a latency perspective. So we really didn't have any slippage in SLAs or anything from a technology perspective. We are lucky that our underwriters all have laptops, all the managers do. So we do have a lot of virtual meetings where we, turn on the cameras. I'm a big believer in it. And I'm always happy when folks on my team, turn video on. It's almost like we're still sitting in the conference room, so we get a lot of stuff accomplished, that way.
we've had a lot of these connections to some of these alternate data sources. For some time, as I mentioned, they were in a pre-pilot or a pilot phase. So we just had to kind of make a few changes internally to make some of those more readily available to the underwriters to order. I wouldn't really call it a challenge. It just took us a little bit of time for some of them. A lot of our systems in the home office are designed to work under optimal, normal operating, capacity. Nobody ever thought of a pandemic, or all of a sudden you have to turn off this or turn off that, or do something different that the system just wasn't designed to do. So that was fun working through that. Luckily, it wasn't as painful as I'm describing it, but that was one of the challenges that we did have. From an e-capability, we've had electronic, e-requirements, e-delivery for some time, and they've been performing well up into COVID. And we have noticed that a lot of our customers that didn't use them in the past started using them just because they couldn't have face-to-face meetings with the proposed insured. So we have seen an increase in usage of our digital capabilities with no, to my knowledge, technology challenges with that.
Okay, great, thank you. I know that a question that I think the audience would like to hear us talk about is, do you see the changes in underwriting for the older ages remaining for the foreseeable future as it relates to COVID? I know that was touched on a little bit during the challenges portion, but how long do you foresee that either max age that you guys will take a look at a case, or a hard limit on substandard? Is that going to remain indefinitely? Does that change with a possible vaccine? Can you kind of touch on, because the reality is there are a lot of older clients that look at life insurance, and those tend to be the healthier premium cases that we all like to work on. So kind of touch on a little bit, discuss a little bit around how you see the older age restrictions progressing and hopefully dissipating at some point. Kelly.
Yeah, thanks. Gosh, I guess my reaction to that is, gosh, I hope this isn't forever or in the foreseeable, the long-term foreseeable future. I don't. Age 80 plus was always a challenge, is always a challenge from an underwriting standpoint, especially like 80, 85, you get into the mid 80s. That's always been a little bit of a challenge. I think that one, will take a little bit longer. I mean, when you say vaccine, I think, that might solve it, right? It might get us back to baseline. I hope it doesn't take until a vaccine to completely get there, although when I say completely, it could, especially that 80 plus, I think is going to be a challenge. I think as we all learn more about 70 plus and 60 plus, I would foresee those changing and tweaking. I think the challenges that we're going to face more so are, how do we handle individuals that had COVID? Not the person that had it and stayed at home and they got over it. That's pretty easy. It's, the individuals that required hospitalization, that had the comorbidities, that were on a ventilator. I think we don't exactly know what happens chronically with those individuals. Now, mind you, a lot of those individuals had a lot of chronic medical impairments to begin with, so they're not that clean, healthy, older person, where we all hope to get in the door. So they may well have been highly rated to, uninsurable before, but I think that's where we're going to learn. What do we do with those? That'll be one issue going forward. Just relaxing some of those. What do you do with a 65-year-old, or what do you do with a 78-year-old? I'm hopeful in the next several months, for us, even in probably the near future, I think we'll be able to simplify hopefully a little bit there, because we're learning a little bit more. Maybe in the next several months, we'll all learn a little bit more from an industry standpoint. What's our impact mortality wise? Where is truly the risk? Hopefully in the absence of a vaccine, maybe effective treatment, and as that comes about, I could definitely see this lightening, maybe even in that 80 plus. I don't know. There's just so many what ifs, I think. But those are the things that we're thinking about, honestly, pretty much daily at this point.
Yeah.
I said when this all first happened, oh, this is just temporary. It's just temporary. And quite honestly, I guess my initial thought would have been by now. But it's turned into more than that, unfortunately.
Yeah, Mark, how about you?
Yeah, so we're looking at it every month to reevaluate, see if we should make any changes. Like Kelly, I'm hopeful as well. That we don't have to wait until a vaccine comes out to revert back to normal. I really think it just depends over the next couple of months how this pandemic continues to progress. Are we going to continue to see increases, essentially across the country? Are hospitalizations going to go up? Is there another effective treatment that possibly can come about that helps from a mortality perspective? So it's kind of like looking into a crystal ball. We're not sure at this point, but I would assume, for the time being, that the guidelines that we put in are gonna remain, with the hope that in a few months, possibly, we could have some movement. But again, there's so many unknowns with this; it could change tomorrow, one way or the other.
Yeah. So I'm going to go off the board here since we have just a few minutes left, and I promise not to put you in a position to say something you're uncomfortable with. But I kind of wonder, and I think the audience wonders as well, what has living through and working through this pandemic, how do you think that it will change specifically your carrier's view going forward? Because a lot of people think this isn't the last time we'll see something like this. So I guess, how do you feel living through and working through this will help your carrier, Kelly Protective, Mark Pacific Life, be positioned to be more nimble and more effective when and if we ever encounter something like this again? Kelly?
Yeah, so I think it's shown us so far, clearly we're in the midst of it right now, that the ability to work from home and to get all of our staff able to work from home in a very short period of time and fully functional, and truly they have been fully functional, is absolutely essential. I know we're talking as an organization on what does that look like in the future? Remove the pandemic, but are there certain areas that can function that way, similar to how underwriting has been? Underwriting's been very, very successful in a lot of companies, but are there other areas? And it just, from a staffing standpoint, that just makes you more nimble, number one, in it, and then it helps. There's obviously some tertiary things like employee retention and satisfaction and all those things, and maybe even an increase in productivity in certain areas. But that aside, I think it's also shown us the need for an efficient digital end-to-end process. Like I said, I think our telelife process is excellent. That said, are there other things we can do outside of that telelife process? And I think that's where we're going to continue. We as a company and obviously as an industry, we're going to need to focus on that. Focus on areas of how do we make this process easy for the BGA, the agent, the client, to the degree possible. And continue working down that road and not, have our blinders on that it's got to be this way. We got to have, the examiner out. We've got to do this, got to do that. There may be certain situations definitely that you have to, but there may be some alternative methods to get things done as well. Everything's shifting. So.
Yeah. Mark?
Yeah, so similar for us, it's been a good opportunity to see for other areas of the company that really didn't have work from home. How would that work? And we've seen some great success. So we might see different positions in the future that traditionally in a home office would be, in the home office full time. It has an opportunity for remote. And as Kelly mentioned, it just reaffirms why we have to continue to invest in technology. Look to the future and look for ways to continue to innovate underwriting. So the next time, which hopefully not for a while, something like this happens, right, we can pivot quickly and really not miss a beat.
Yeah.
Let's hope it's not. Let's hope it's at least another 100 years and none of us are here anymore. That we actually have this. But you know what? I think as an industry, we're going to come out of it better. We really are.
Yeah, and I echo your sentiments. I hope that this leads to more efficiency as it pertains to exams and as it pertains to procurement of health records and how many APSs do we need on certain cases, and if that is the end result of this experience for us, is that we are able to make the process of getting life insurance easier, boy, that would be a big win for our industry. Unfortunately, it might take a pandemic to do it, but if that's the result, so be it. So shockingly, we've come to the end of our time already. I really want to thank Kelly Stone, AVP at Protective. I want to thank Mark Crowe from Pacific Life. Your insights were great. I think the audience was able to take away a lot. Richard, sorry we didn't get to spend more time hearing some of your feedback, but thanks again, everybody, for being a part of the underwriting panel.